I, like you, am pretty damn excited about the recent crypto pump that we've seen so far in January. But why is it happening? Why has crypto pumped so far in January? Well, the simplest explanation, well, it was just time. The market had stayed too oversold for too long, and a pump was simply inevitable. Maybe we all just got so bored that we decided, hey, let's all pump the market together. The market was just desperate to find that narrative, desperate to find a reason to pump. Of course, the macro effect still definitely there. Inflation fell again this month, and while the Federal Reserve is going to keep rising up those rates for a few months, we are most likely nearing the end of rate hikes, which could be finished as soon as March or April. Now that is getting the equity markets gosh darn excited, which could equate into a broad appetite for risk, which means that crypto is given a little bit of room to breathe. Until we get some kind of counter narrative, it seems that the bulls are going to be ready to run the whole Fed pivot narrative. Of course, the next Federal Reserve meeting at the end of the month, so we'll see what shapes up then. We also see the emergency move by the Bank of Japan last week to buy tens of billions in bonds, unscheduled. It showed that central banks are still very much ready to use money printing tactics in order to shore up the economies. And that QE is basically their only move at this point. Also, it seems that sell pressure has pretty much dried up in the crypto markets. All major crises are currently either over or they're stuck in lengthy litigations like FTX that could last for years. Bitcoin miners also stopped selling a few weeks ago, and any retail money that was planning on capitulating, they did so a long time ago. So who at this point is left to panic sell? Apparently not really anyone. We can also just factor in that broader risk appetite attitude coming back into the market. Like moths to a flame, a pump tempts the money out of the darkness. A pump can lead to more pumping, right? Respect the pump, guys, respect the pump. Markets can become self-fulfilling prophecies as long as there is enough money in the system to back up those moves. While many, of course, will be slow to adjust from a complete devastation bear market mindset, the market could keep pumping without any super meaningful pullbacks. I'm saying like we're gonna have 10, 25% pullbacks. That's very common. So what happened in 2019, for example, but we didn't get any 50% pullbacks until the run was over. Most people will be too slow to adapt to the chains. They'll be shorting every move, getting ground up in the market. Look, don't let bear market PTSD mess you up. Crypto markets are still super exciting. I'm not saying we're totally out of the woods yet, so caution still advised. But for now, let's just say it felt good to buy Bitcoin under 20K. I hope the market gives me some more opportunities to do that. Also, one big thing to pay attention to is that institutional buyers have decided to show back up in a big way. This chart right here shows one of the biggest spikes in institutional interest in Bitcoin in a pretty long time. And that doesn't even count all of the buying that's likely to be happening over on places like Coinbase and other platforms, since this chart's only tracking OTC activity. But just remember, institutions, family offices, and yes, of course, even retail investors, someone's always got money. There's always money out there. The only question is, are those actors willing to gamble that money on crypto right now? Currently, the answer seems to be leaning towards, yeah, maybe. But keep a cool head because a lot of things can still derail markets, so remember that. By the way, if you are a crypto trader that needs to grab yourself an account over on Bybit, 0 fees for spot market trading, up to $30,000 in deposit bonuses exclusively for those of you using the link down below in the description to sign up for your account. So check that out. Okay, that's it. Subscribe now. See you next time.